Just a small disclaimer before I start the video. I am not a professional trader. I am sharing everything with you guys that I have learned and how I see it. If I improve in any way and if I do something wrong, I will update you guys on it. If you have any help for me as a better trader, please tell me so I can give the people that are watching my videos proper explanation about how things work. But I am explaining everything to you guys how I see it, and I'm also still learning, so I do hope this helps you guys a little bit. And yeah, let's get on with the video. What's up everyone, welcome back to another video of me trying to give you guys some value about what I have learned this week. I just want to start by saying everything I learned is from the Echo course, and it is really helpful. I've got to say I did 2 courses right now, and pretty much those 2 courses were really similar to each other. The other one was maybe a bit more in depth, but too much information. And I have to say the Echo course is just it's not too long. Like the videos you watch on subject are not too long, but it's really clear. Like I know what to do, I know how to use it. I do have to watch sometimes a video like 2 times, but that's just because it's hard. Trading is hard, and watching the video over and over is really helpful, at least for me. But yeah, basically I've learned a lot this week, a lot, and I worked on a trading plan as well. Echo really helped me with that, so I will be talking about subjects in this video. I will be talking about POC, point of control, double mitigation, and how I made my trading plan, and why you should have a trading plan, why it's helpful to have a trading plan, why you need a trading plan actually, because without a trading plan you're gonna get fucked. Yeah, you need a trading plan. It's it's probably one of the best things I started on, and I should have started on a trading plan way earlier. But yeah, with the more information you get, the better your trading plan will be obviously. I will be starting with what is a POC. So what is a POC? POC is basically a point of control. It's the price level for the time period with the highest traded volume. So in noob language, what this means is basically where a lot of people came into the market to make a certain move. So let's I've set up something over here where I can show you guys properly how I did a trade on it with my strategy that I made with my trading plan. I won't be going in depth about everything. This is mostly just the POC and how I took the trade with the POC as a confluence. So let's just skip forward. Let me just get all the levels over here. Then we need this one, and this one. This is something I've already back tested, so I'm just gonna show you guys a example, and yeah, that will basically show you guys how I did it and how I took a trade with it. So what's happening over here is we got a 4-hour zone over here. We already had a break over here, and now a break will happen to the upside because we come out of a 4-hour zone, right? Okay, so this is where the break happened, right here. So this is where a lot of people came into the market, right? You already have a little push up over here, and then we go all the way up to this break. Little rejection over here is happening. So what I see right here is a 50-minute FVG. I will be explaining this in a video next week. I'm already working with it, but I need to watch some more stuff about it so I can properly explain it to you guys, and I want to explain it in the simplest way that I can. Like, I don't want to give wrong information, but I'm just going to explain things to you guys in a way I understand it, and I hope that you guys understand it in a starter noob kind of way then as well, so then that you guys can use it for your trading. So what happened is we had a break over here to the upside, and now what we're looking for, we want to go to this unmitigated zone, right? Because this is what I've marked. This is the zone where I want to go. This is the next zone where I want to go. If you look on a higher time frame, let's see, yeah, that's still a 1 hour zone that's unmitigated, and that's where we want to go. So let's go back to 15 minutes. So what we do with the POC, you can take it over here on the left side where you have your long and short positions as well. It's the fixed ranged volume profile. So you take that and you put it on the lowest imbalance, right, before the break of structure. So I put it over here. Why are you not working? Okay, so this is where we go back. I needed to press further a little bit. Please don't fuck up. Okay, so this line over here, I'm colorblind by the way, so I don't know if this is green or yellow, but this line over here, this is the place where a lot of people came into the market, right? This is where it broke the structure. This is where it still went up a little bit. It broke structure over here as well. Can mark this right there. So this means that this is the point of control right now, because this is where it broke multiple structures, and this is an important place where you can put your entry. This is just one confluence that you could use, right? There's way more to it, and you can see that in my entry as well, because my entry is not over here. I have my entry on the 15-minute FVG, and that's what we'll be trading from. But right now for me, this is something extra that I will explain in a video probably next week. But basically this could be your entry. If we're only talking about POC, this could be your entry and maybe your stop loss under the wick, right? Okay, so let's see how this plays out. Okay, it taps in. As you can see, we immediately have a lot of buyers. And that's because this point right here is where a ton of buyers already came in. So it's a place where a lot of volume came in. A lot of volume came into the market right here. So you can expect it to be a strong point where a lot of volume will come in again. And that's basically very simple point of control. And this is something extra you can use in your trading. So let's go over it again. What do? You have a break of structure right here. If you want to take this break of structure, you can take this break of structure right there. And what you do is you put it on the lowest imbalance. So this cheeky candle over here, let's just remove this bitch. Okay, this cheeky imbalance over here, right? You can get the 50% body candle, then you can see the imbalances. But this cheeky candle over there, this is where you put your fixed range volume profile on, and then you do it all the way to the top, and then you can see where all the volume came in. And that can basically tell you, like, okay, this is where a lot of volume came in. Let me take a look where I put my stop loss, and let's see if I can maybe put my entry somewhere close to that point of control, because that point of control does mean there will be reaction to it, because a lot of volume came in from it. Okay, let's now talk about something else I've also learned this week, and what is really, really nice, something you can take a look out for. It's not always gonna happen, but it could happen, and the a trade like this is a huge confluence if it happens. What I'm talking about, double mitigation, and basically what double mitigation means in noob language, okay, is I have an order block over here, right? So we're bearish, and this is where a break happens. You see a break happen over here. So what does this mean? This major zone that we marked over here basically broke this structure, and here's probably a 4-hour zone or just a zone where it reacts to, and it comes all the way back to our major zone. This zone is very strong because the whole impulse that you see over here happened just because of this zone, right? Okay, so then we go on, then we break structure over here again. So we had one mitigation over here of our major zone. What we'll be looking for now is we can try and put a sell on this right here. That's basically the double mitigation, right? Because we mitigated over here, and then we want to mitigate over here as well. So this zone is really strong because it broke a structure again. So we basically just do here what we did over there as well. So we did the POC trade, right? Well, there was more to it, but if we're just talking about POC, we did the trade. Let's see where it goes. Well, I already know where it goes because I already backtested this. As you can see, this would have been a 9.4R. And we also tapped into the double mitigation zone, this order block from us, because this zone was still unmitigated, and yeah, basically happened over here. So this will be our double mitigation if this taps in, and it did tap in. Where is our next unmitigated zone? That's right here. And why is it right here? Because this is their zone, right, where it broke the structure over here and where we took this trade. So this is where this place, this imbalance is where a lot of volume came in. It's very simple. I'm explaining this very simply because I just want to be fast with it, and I just hope you guys understand. Basically, I'm just saying how it is, right? I'm not explaining it as in the Echo course. The Echo course is really explaining it properly. I'm just telling you guys how I see it in my head and how I use it. And obviously I'm using it with more confluences and more things. I'm not just taking this short because, oh, it's a double mitigation. I'm looking at more things, and yeah, that's something I will tell you guys in the video of my trading plan. So why we took this short, we had a mitigation over here. It broke the structure, right? Actually, let's start over here. This zone broke this structure, it mitigated, and then again it broke a structure again. We need this structure break if we want to take this zone. If the structure wouldn't have broken over here, there is no point in taking this short, because then we didn't have the confluence that it was strong enough, right? Then it could have broken out. But right now we know it broke this structure over here, so we know this zone is strong as well, and that's why we can take a short. Our target is right here. Why is our target right here? That's basically because this broke a structure as well, so this is a strong zone as well, and that's where you want to target. So I hope that helps you guys out. It's just very fast, very simple, but yeah, it's something you can add to your trading plan as well, or to your trading in general. And let's get on to the trading plan. Okay, so trading plan. What is a trading plan, and why should you get one? Why do you need one? Well, basically a trading plan is something where you have your where you have how you trade in, where you have your target rules in, where you have your general rules in, and you could also put in your trading plan what you need to think about when you are trading, what you need to look out for. So how I have set up my trading plan is, first I have the setup. So before, like let's say the night before or on the day itself, I look what zones do we have. Are we bearish? Are we bullish? Are we in a correction or are we in an impulse? And do I need to set alerts because there might be coming an entry? It's very important that you know before you're going to start trading, that to see what's going on in the market and where you could get an entry if it meets all your confluences. Next up, I have the trade. So basically, what's this? This is basically what I look for. These are basically my confluences. And before, when I made my first kind of trading plan, I had so many confluences, liquidity graphs, blah, 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 this and that. But you want to keep it very simple. You want to keep it very simple because the simpler it is, the easier it's going to be for you to take the trade, right? But you need the proper confluences. And it's really hard to find those proper confluences, but just start out by putting in confluences, just a lot of confluences, and then backtest it and see what works best, which one of those works best. That's at least, that's what I did, and that's what really helped me out. Because if you are looking at too many things, your checklist is basically too big. You will never meet for a trade. Of course, you need to think about a lot of things before going into a trade, but just have like 3, 4, maybe 5 things that you need to look for when you want to take a trade, and all the other smaller things that also matter, just keep those in your head and just think about it before you take the trade, but don't put that on your trading plan. You want to keep your trading plan as simple as possible, but you want to backtest it. So let's say you only put 3, 4 confluences right now, yeah? Then you backtest it, and if it works, then it works. If it doesn't work, after a lot of backtesting, then you tweak it. Just tweak one thing, because if you're gonna tweak 2 things, you won't know what was the problem, right? If you're changing too much, you will never know what's the problem. So you're basically building a house, like a house of blocks. You're just step by step, try new things, try one thing, and then just move on from there, and your trading plan will be a good plan in the future. What's also important is, when do I close my trade? So you definitely have a TP, like a target. You need to set your target. Obviously, you need to. My targets are 1 hour in mitigated zones, so you can also pick your target. It's just whatever you like. You can also have a set R, let's say 3R or 5R. But you can also have some rules when you're closing your trade. Let's say high impact news, or the New York session is over, or you're gonna close 90% at 5R. Just those kind of rules, because this will, or when you like put a trade on break even, like you don't have to close the trade, but you can put it on break even. These kind of rules, you can write them down on your trading plan, and this will help you basically to manage your trade easier, and then you know exactly what to do. I have to say it's hard at first to just only trade your trading plan, but once you notice your trading plan is working, there shouldn't be a reason why you wouldn't just stick to your rules, right? Because it works, and if it works, why would you do something else? And then the next thing are just general rules. So let's say when you break 2 internal structures, you're going to put it to break even. You have a max loss of 1% per day. You're going to risk 0.25% per trade, maybe max 5% profit a week. Those kind of rules, just general rules of trading that's going to help you in trading. So let's say the 0.25% risk per trade. If you're doing a funded account, you probably want to trade less percent, just because let's say you have a max drawdown of 5%, I think, on most. If you have 5 wrong trades and you trade 1% risk, you're fucked. Like if you are a person that trades a lot, like takes a lot of trades in a day, you probably want to cut down on your risk, because otherwise you're going to hit that drawdown really fast. So those are things you need to think about. It all depends on the way you trade, but you need to think about what are the best set of rules for my trading plan for the way I trade. And why this whole plan is important, because if you do not have a plan, it's basically gambling, right? Because if you're gonna make a business, let's say you make a business, you got a plan as well on how you're gonna make the business, because otherwise it's not gonna work. And the same goes for trading. I will go deeper into my own strategy and what I do, but this is just me talking really fast about a trading plan. I'm not going that deep into it, because Echo will come up with a course basically about how to make a trading plan, and it's really helpful. So definitely check that out. I will put a link in my bio to the Echo website, and there you can find all the information, and these guys will help you out really good with your trading plan, and it's gonna improve your trading by loads. Like, it's really good to have a trading plan. It's really important to have a trading plan, but it's very hard to write a trading plan, a proper trading plan, because you get very lost in it. It's not an easy thing to make a trading plan. It's also not an easy thing to set up a business plan, right? And the same goes for a trading plan. People really think easy about it, and they think like, oh, they're gonna backtest a little bit. Oh, this works, right? But then you notice it's not working in a live market, and you're like, oh shit, why is this? But on Echo, they will help you with everything, and you will get there will be a course about writing your own trading plan, and that's gonna be very important, and you're gonna be thankful if you've watched the course that they will make in the future. So yeah, I did everything. I talked about everything pretty fast. I didn't want to go too deep into it. Yeah, I'm just gonna share with you guys what I've learned in a short version, and I will also make another video of my strategy, so you can properly see how I use the things what I've learned. Because right now I've just talked about subjects and not really back tested, but I will make a video of that, so you can expect that in the future, maybe this week as well. I'm not sure, but yeah, I hope this was helpful. I hope you guys can get something out of it. If you've got any questions, just let me know, and if you're kind of confused, just wait for the strategy video, where I will basically talk about everything while I'm backtesting, so that's gonna make everything easier for you guys. I hope to see you guys next time, and take care.